Tavi Costa has joined us for the first time in the program for a deep dive into macroeconomics. We unravel the reality of inflation, recession, and the future of commodity markets. We'll discuss how energy, battery, and precious metals can react in front of the next inflationary wave, and probably the most anticipated recession of our times. To delight us, Tavi is armed with data, graphs, and one-of-a-kind opportunity that demands our attention. Stay tuned for his macroeconomical masterclass. Welcome, mining lovers. This is Charlano de Minas, the Spanish podcast dedicated to mining investment. Now, in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start. Hello everyone to Charlando de Minas, the Spanish podcast dedicated to mining investment. Today in English. If you are expecting this in Spanish, don't worry, we'll have this episode translated to the language of Cervantes. Today is one of those days that we have a very special guest that a few years ago I could only dream of. Today we have Tavi Costa, macro strategist of Crescat Capital. Hello Tavi, how are you?
I'm great, thanks for having me. Looking forward to this.
With me, joined to the program, we have Danny from Dragon Oro Plata, a channel of macroeconomy and precious metals. I know that he wanted to be here so badly, and sometimes their dreams come true, right, Danny?
Yeah, definitely yes. You know, when you told me, hey, there's some chance that Tavi can, be in the channel, and they said, "Wait, hey, you can count on me even as a water boy, man. I can go there just to be there and just to drop, a bit of, content on the channel, and actually feeling really honored to be here.
You guys are too nice. I'm happy to be here.
Okay, let's just start then, Tavi. I want to dive in the possibility of recession. We have a scenario that looks like the 70s and the 40s. High inflation, high debt, a lot of printing, and a generation with low saving power. Most general economists think that we are heading into a recession. What are your thoughts about this?
Well, I'm in the stagflationary kind of camp, and I believe that we're highly likely to be in a recession in the next 12 months or so. And I think most of the macro indicators that are the most reliable ones are already pointing to that direction. I would say the yield curve inversion, we've done a lot of work on that. The percentage of yield curve inversions are starting to show those issues. The tightening of monetary conditions, which is at a level that we haven't seen in many decades as far as the steepness of the rate hikes, along with the quantitative tightening. And you add that on top of that, this real shift away from U.S. Treasuries that we're seeing, which I think will happen even more. I think we're just at the beginning of those capital flows out of those instruments for many reasons, especially given that we're in a very different environment that we saw back in 08 in early 2000s, where those recessions are more disinflationary in their nature, where you had most of the bonds actually rallying while you had a decline in equity prices. And I'm referring to treasuries mostly. And I don't think that would be the case today. And so there's a lot of shifts happening, 60-40 portfolios, central banks finally accumulating gold. And all that is playing in almost a major shift in prices of assets. We're seeing equity markets with a lack of leadership. There's no leadership at all. There's outside of those large cap names. And if you looked at Russell 2000, which is small caps index and micro cap index, all that looks really fragile in my view. So, in my opinion, I think a recession seems to be the kind of a baseline for our views here.
Now we have a pause in increasing interest rates, but we might have a further increase if inflation behaves like the 70s, where we didn't have a steady inflation. Instead, we have ups and downs. How do you see inflation moving forward on the next years?
I think inflation is the fundamental question of recession or no recession, because the only way we can really see something have more severity in terms of the tightening of monetary conditions has to do with the reacceleration of inflation. I believe investors and policymakers are making a mistake of neglecting history and what we learned throughout other decades, which is inflation develops through waves. We saw that in the 1940s and 1930s, coming out of the 1930s, and also in the 70s. And in my opinion, we already had a first wave of inflation and we're in the process of bottoming that out. And if that's the case, that would be a huge mistake by the market to be already pricing in 4 to 5 interest rate cuts in the curve of the euro dollar future. And so I think that that's one of the things that will surprise the markets is that we see inflation reaccelerating in this quarter. And if that's the case, and that is along with not only energy, agricultural commodities, and most other things that are starting to pick up, including housing, which even rent prices are starting to pick up again. And so that reacceleration of those underlying factors in inflation will play an important role into forcing the Federal Reserve likely to be doing more, not less, when it comes to rate hikes. And it's important when you see people like Jamie Dimon or even Larry Summers. Those folks have, and not that I believe in what they say, but I do think that they have a very influential role in the government, and they know there sometimes the folks that speak towards or for most of the members, the policymakers that are making those rules, and so the fact that they're coming out, Larry Summers just tweeted a chart of the 3 waves of inflation of the 70s. Who would have thought? Or if you look at Jamie Dimon's comments about the Fed potentially having rates at 7%, and saying that his investors or clients are prepared for kind of a more stagflationary environment. That is in line with my view. I think that's precisely what's going on, and I suspect that inflation's in a process of bottoming out.
Okay. I think that it's time for your question, Danny, because it goes really well here.
Okay. Now, in this high inflation scenario, mainly caused, not only, but mainly caused by high energy prices being steadily around $100, how this will impact on junior and senior miners, on your opinion, and which will be the most damaged side, the junior or the seniors?
I think short-term moves in energy can have an impact in margins, as you just pointed out. There's all sorts of types of miners. You have the explorers, the developers, and also the producers. The producers would get hurt more in terms of the move in oil prices, although I've never seen a move in gold, a cycle for gold that doesn't coincide with other commodities doing very well. And so I would expect that not only oil would increase, but also other natural resource prices as well. And so I suspect that in the 70s, we had energy prices rising and the miners did very well. So I think it's going to be a similar environment. Also, I would point out the explorers is where we focus most of our time and capital, because I think that money, or I should say resources in the ground, are going to be the way to really leverage this idea of investing in a commodity cycle. And so I'm really excited about finding those high quality assets to be an investor of. And I think a lot of those are priced for failure right now. Now, this issue with natural resources is really embedded in the economy by many angles. And I would say specifically, yes, there is demand from a green revolution perspective. There is also demand from construction to reshore and reduce reliability with authoritarian regimes like China and Russia through manufacturing fronts. There's housing supply issues. Affordability of housing in the US and other developed economies is a real problem. And you have inequality issues now also exacerbating those issues that will cause even the government potentially to step in. So those construction developments are likely to also create demand for materials, and we come full circle with commodities demand again. So I think that's going to be important. And at the same time, as we haven't seen really any type of large investments coming into the natural resource industries, especially relative to GDP levels. If you looked at how much we've been spending in terms of capex among most of the producers, it's at historical low levels when you adjust for GDP. And so, $10 million today spent in the ground is certainly not with the same effectiveness that you had in '08. So I think there's a lot of angles of the inflation issue, and will probably be a decade that we should be emphasizing ownership of hard assets.
Why do you think that it's happening, that lack of capex investments? It's about ESG policies, it's about funds and finance and money makers are not like relying on too much on commodities or things that you can touch. What's your opinion on that? What do you think it's the cause, the root?
I think there's so much in that question. Let's start with the fact that we have a lack of geologists initially, right? I mean, there's a difficulty to find labor in that space. And why does that matter? Because the abundance of those folks that understand the industry will also allow money managers to deploy capital in this space. And so I think that's having a critical impact in terms of attracting capital and money towards the natural resource industries. I would say the value to growth issue in terms of how much capital has been chasing growth, not value companies. And most of the natural resource companies are into the value space. I think that has also played a big role. And the fact that we've been in so many years or decades, I should say, of easy money policies that have allowed those companies to really focus on growth, not value. And look at the mining space in terms of their reputation has been always that they've been drunken sailors in terms of how much they've been spending or misallocating assets in general. So all those things, I think, are very critical when it comes to institutions to deploy capital into that. And I would say the traditional portfolios like 60-40 investment strategies have also been way too popular relative to other periods in history. And so they've never been more expensive in terms of how much they offer in terms of earnings yield in the equity side and the bond side. So I think that also had an impact on this as well. But I think there's a lot of potentially even other things that are causing this issue.
In terms of energy, carbon had a really nice rally when energy prices went up. Gas went crazy with the Ukrainian war. Oil, it's continually bounced between 80s and 100s. Uranium is slowly reached the $70. How do you see the different energy sources outlook?
Well, I find it so interesting how in a commodity cycle, yes, it's sort of, they kind of shift in between commodities when one is at a rallying period and the other is taking a break. It's really interesting how that works. And I think people are not really paying attention to that. It started with lumber and then it's nat gas and then it turns into oil. And then you see a run in silver and all those things kind of shift. And that's really what attracts investors is when they start making money in those things. There's no better marketing than making money into in an asset class. I mean, that's the whole reason why the crypto space has been formed is because a lot of people made money and now a lot of people lost money. And so, they're going to their own challenges. And it's very true. The gold space has been damaged for so long because of the fact that nobody has really made a lot of money. So we need discoveries and successful stories to really bring attention back to the space. So answering your question, I am very bullish on energy. I think energy recently, I mean, there's a long-term view and a very short-term view. I was a little bit concerned by the fact that we've had a big run up in oil recently, but didn't really accompany by energy companies. And so, to me, there was a catch up for oil prices relative to energy companies. But now we're seeing kind of the opposite. Now the energy companies already kind of had a pullback of about 8% or so. and it's starting to look attractive again in terms of those. I'm a buyer of those 10, 15, 20% pullbacks in energy commodities, and so we've had half of that already in energy space. I think it's time to deploy a little bit of capital there. It wouldn't surprise me if we have upper pressure in oil and energy really playing a role as well into damaging the economy. Like we saw in the 70s, where the economy may actually contract as we see oil prices rising. And so I think oil is a very important. It will play an important role as well in a portfolio as a hard asset. And I think it's I would say among those energy types of commodities, I would say nat gas is on top of our agenda right now.
Okay, then if you have to choose between these four, coal, nat gas, oil, and uranium, you will choose nat gas for playing the inflationary wave. Let's say.
Oh, for now, I'm sure I could change my view in 3 months, 6 months from now, depending on the move.
Yeah. Of course, right now.
But right now, you asking me today, I would say nat gas looks very appealing. Nobody likes it. Nobody can see a big move in it. And even our energy analysts are skeptical about it. And I'm just saying, look, if you're in a commodity bull market, and you, like I said, they rotate among themselves of which will have those rallies. And when you have one that has been consolidating for some time, it's time to be stepping in. And I think nat gas is in that position right now.
Perfect. In the 70s, commodities outperformed all the other stocks, especially gold and energy. Gold stocks were up 340%, oil went up 361%. Now, if we are heading to a recession, you always show this graph where you have the S&P 500 versus a bunch of commodities. What do you think, that commodities are cheap or the S&P 500 is really expensive?
That's a good question. I personally think it's both. I know it's maybe not the answer you want, but I really think it's both, because I haven't seen, if you just a curiosity, if you read the newspapers of the 70s and so forth, which I like to go back and read those when I have chance to get access to those things. And it is really interesting how much the media would speak about the price of commodities. And newspapers today are starting to do that. I mean, despite the fact that we still talk a lot about technology and other parts of the economy, it is very clear that the coverage in natural resources is starting to pick up like the 70s. And so that was a very relevant part of the overall global economy. And I think we're going to see that again. I also think that emerging markets that are more favorably in terms of having rich resources in their ground are going to be great places to be invested in. I think Brazil is one of them, and South America overall looks really attractive to me. So those are also big changes. But yeah, I mean, I think the equity market is to me priced for perfection. I'm not sure you can really. I think about things sort of squeezing an orange, and I think all the juice of that orange is already out when it comes to the equity market in the U.S. And I think that there's a lot of juice in commodities still. I mean, somebody came up to me and said, "Hey, it's why you're so bullish on the miners when they're trading terribly?" And I'm like, well, this is the time to be trading. When was the last time they're trading at record levels? Well, that was at the end of a commodity bull cycle. And where do we think we are, at the end of one or at the beginning? And so that answers your question. But it's interesting because I think things get really unloved for a reason. Sentiment gets really negative for a reason. We're there again, and it's always going to be, there's always going to be a sector in a segment of the economy that will be forgotten. But it's interesting because mining is probably one of the oldest parts of the economy that we know of, and it's been part of everything that we have in terms of building what we've built over the years, and all the infrastructure developments we had. It's been responsible for all that. And so to me, it's quite interesting that we have so much history of data into that industry, and people are still just thinking 1 or 2 decades back. So there's a reason why some people make money and others don't. And so I hope I'm part of that group.
Gold outperformed this last year since COVID-19 lows. I was checking, no, gold was 1,200 in the 2019, meaning that it's over up to 67%. However, miners didn't perform as well and underperformed gold. In the same period, GDX, it's only up 50%, GDXJ is up only 25% over the last 5 years. In a recent interview, Rick Rule said that it's due to the margin cost, that even the gold price is up, the companies are not making as much money as they should. What is your opinion about it?
I don't disagree with Rick on that. And I also think that it has to do with the fact that we didn't really see a major bull market in gold. The fact that we just hit all-time highs but didn't really break through those levels that we've had over since 2011, really. We've been kind of in that range of the 2011 highs to the recent highs. And so I think when we break through those levels, like we saw during other times, it's really what attracts capital, and people start seeing that, well, there's not much asymmetry in the gold price itself. And now that we're more confirmed into a technical bull market, perhaps I should start really looking at the miners and taking higher risk. And that will make more sense as well when it comes to estimating free cash flows of those businesses. And so, yeah, we're kind of in that range right now. I think it's great, actually, because I don't see a lot of downside for gold prices, which allows me personally and as a fund to take more risk. Because I'm not sure we can see gold prices at 1,500. So was it ever a time when I saw all these macro trends kind of really creating this tailwind for the metal? And the skepticism is at all-time highs. Everyone hates gold. Can you imagine if I had a drink for every time somebody says, there's nothing wrong with getting 5% on a treasury yield? Yes, there is something wrong with that. If you see gold up 20% and you only made 5% on your money, there's definitely something wrong with that. And I think that's what's going to happen here. It's such a conventional thought that it's just a matter of time for that to occur. So anyways, I think that's why I get so excited, because I think if there was ever a time to take a risk and find those asymmetric bets on a gold price breaking to, $2,500, $3,000 an ounce, it would be now. What's the downside? Being down, going back to 1,800, 1,700, 1,600. No, it's not going to make a huge damage in those. If you own a large, high quality asset in the ground, I'm not sure that really changes the game. You still own that. It's already priced for failure anyways. So I think there's a lot of upside there. So I really focus my time and money into that part of the economy.
Danny.
Yeah. I've seen your interview recently. I think it was yesterday or before yesterday with Kitco Mining, and you were talking about a very interesting concept about deglobalization. What's your opinion about deglobalization as a catalyst for mining? How does it work in your mind? How it's going to drive the game in the near future?
Well, I think that one has a lot of different ways to analyze it, because let's start with the fact, deglobalization potentially started with Trump in 2016. That's just an idea, because he really started to become more popular in one side of of politics in the U.S. when it comes to really going after China. And that was a very sort of apolitical view at that time, and now it became a bipartisan view, where even the Democrats are starting to go after China. And that's really interesting, because that whole thing really shifted not too long ago, and sort of exacerbated over the years with Russia invading Ukraine and so forth, and the Middle East becoming more and more critical as well, and the relationship with Saudi Arabia and so forth. And so a lot of commodities have become very, I would say, geopolitical in terms of those relationships. And now, how does that involve with mining? Well, first, if a developed economy wants to reduce reliability with China, we got to get going now. No construction developments need to start yesterday, not today. And so if that's the case, we don't have all the materials, all the mines, all the things that we need to supply those big changes. And so, when you think about permitting and even the involvement of the government over time, green revolution, which is likely to happen, like it or not, all those things are going to need some involvement of the government. I mean, it wouldn't surprise me if we get home builders getting subsidies from the government, or if we get some mines getting subsidies from the government in order to develop things quicker. But I think the first trend, and why I'm very bullish in South America, is that places. So right now, the way the market is pricing in assets in the mining space is that safe jurisdiction deserves a premium. And so if you see a place, an asset in Canada and the same asset with a similar quality in Bolivia, it will be trading in a much lower and a much higher discount relative to that same asset in Canada. Now, in Bolivia, you potentially, we're involved with Bolivia very much, and you can develop a project in 2 years potentially. Now you can find a mineral and get into production in 2 years. Can you do that in the US? Good luck. It will take you 10 or 15 years today, as of today, to get something into production. And so I think that change in the market perception by the difference in timing to get something into a cash flowing asset is gonna start to be, we're gonna close that gap a lot more. They're not gonna be trading as much as a discount as they used to. And I'm not saying there's no political risk, and therefore, I mean, of course there is, and there's always gonna be some of that's gonna be priced into those assets. But I think that gap
that is political risk as well in the US.
Absolutely, yes, and if not more when it comes to developing a mine. Now, I do think that gap is going to have to close. So to me, owning some part of our portfolio in South America and other places that you feel comfortable with in terms of the political environment, that you can be more sure and have a higher probability of getting those things into production, it could actually be a very attractive way of I think those places are going to become great partnerships with those developed economies that need those metals and materials. And so now I hope I answer your question, but partnerships are changing globally, and I think South America will play a very important situation in terms of creating those different friendships with countries. And South America is still very neutral, especially Brazil and some other parts of South America that are likely to be those big winners in this big changes.
You just said about South America, but there is a lot of measures that are changing South America for Africa. What are your thoughts about this jurisdiction?
It's not a jurisdiction that is our focus, and that's just because we don't understand that, and we don't have very good connections in that market. So I might not be the right person to ask. Although my general view is that there's a lot of Chinese money. I know people say there's also Chinese money in South America, yes, but it's a lot more entrenched in those areas than South America. And I can speak for Brazil, and I know that there's capital going there. I mean, they just recently bought the largest utility and some of the largest utilities in Brazil. I mean, they've been certainly deploying capital into the country in a large way, and very strategically as well. But it is not yet, completely corrupted capital just yet. It will be. I'm not expecting. I mean, it will be. Don't. It's like when I say I'm bullish on Brazil, people always extrapolate and say, oh, so you think Brazil is going to become a developed economy? No, it will not become a developed economy. Unfortunately, the chances of that happening is very low, but it will likely be a good place to invest in the next. Investing is about the net change. It's not about the complete change of those things. And so if the net change is positive, at some point, every asset has a price. And so that asset has to reflect that net change that has been positive or negative. And so I think that the probability for net changes in a positive side of South America are higher than Africa. But by no means I'm short Africa and I'm betting against it or anything like that. I just I think you want to leverage your knowledge, and my knowledge in Africa is certainly not not something I would put any leverage on.
Talking about Brazil,
Understood.
that you were talking about Brazil and mining in Brazil. What do you think about Lavras Gold, for example? That I'm sure you know that company very well. What's your vibe on that?
Well, we missed that one clearly, and we missed a few ones honestly that were that did very well, because this is more developed story, but their exploration stories are, they're not a lot out there, right? I mean, they're plenty out there, but there's not a lot of successful ones out there. So we kind of know which ones have been successful, and our goal is always to be, there's maybe 3 or 5 that usually are successful every year. Our goal is to be part of at least one of them. We've been doing that every year. Snowline was our last one. Newfound Gold was the other one at Loro. So we've had a few of those, but we missed that one. So I don't have necessarily a view, and the way our fund works is that we have, I almost, think about those as call options. They all have a lot of optionality, and I need them to really pop to justify the illiquidity, that risk that I'm taking, that is just part of the game. And so when something has already had a big move, it's very difficult for us to justify that. So I'm looking for the new ones.
100%.
How is your outlook for silver? Gold and silver ratio is completely broken. Silver has a strong resistance around 25, which has not been able to overcome. Also, silver is now being used as industrially for solar panels, then maybe lost a little bit of this precious area. Do you think that maybe it is a strong industrial application has harmed silver, or what are your thoughts?
No, I think the industrial aspect, it becomes a function of the price. So the higher the price, the less industrial will become, because the price is just doesn't justify you to put into industrial things. And so that's one side of it. I don't think it hurts or anything like that. If anything, it creates a downside cap, right? I mean, it creates a limited downside potential for the metal when you have situations like that. So, how much can silver fall? If you get silver to $10 an ounce, everyone is going to be willing to buy it and put in their different electronic devices and things like that. I mean, it's just, there is demand on that side. So, it makes it very attractive in that way. So, I think, look, my view macro is that we're really, really, really close. And in macro, you just don't know what trigger is going to be. I mean, you have the underlying factors, you have this tailwinds in the macro side, but there is a major resistance line from 2011 to in a monthly price of silver all the way to now. We haven't really hit that, and it depends. I think it's at $25 or so that we haven't really broken that on a monthly basis, and so it could happen any month. I mean, we've been there many times now, and it's been just hitting that nonstop. And at some point, it will break. And so, what do we do as investors, knowing that? Well, I don't have an answer of when it's going to break out. Now, what I do know is that there are assets that are pricing as of silver trading at $10 an ounce right now, and so, what do? I mean, you accumulate those assets. That's what we've been trying to do. So sometimes, in the media and other things, people may mock you. Oh, you've been talking about this and I've been busy accumulating it. We just purchased the 7th largest silver mine in the world. I would never be able to do that if silver was trading at $50 an ounce. Who would have sold that, right? I mean, everything is, it happens for a reason. And so, I've been busy and trying. I have not changed my view at all. If anything, I'm more and more bullish on it. I'm just trying to, figure out ways to accomplish more and more in this space before anything really moves. And so that's really where I've been spending most of my time.
Yeah. So now that you were talking about South America versus Africa, for example, platinum is basically let's say, African Russian metal. and especially in Africa, that Nordam, Impala, and some other mines, and a few of them are under a Chinese control, as you mentioned before. What is your buy from platinum? I mean, it's a very concentrated resource on certain geographic areas. With a global market, and now how you place that fact with this deglobalization protectionist, environment that we are living in. What you can see for platinum in the near future?
I don't have a specific investments on that, but I will never short any of those ideas you just said. I think very likely, like I said, if one precious metal will start really moving, all of them will, and ultimately they're likely going to be a lot higher, multiples of what they are now. And if that's the case, if your expertise is platinum, you should definitely leverage that because it will likely be a great place to be investor. We own a bunch of other electrification metals. They're not so much precious metals, and things like nickel, manganese, are tin. There's zinc, all sorts of things that we've been investing that are outside of this a world of where most people are involved with lithium and copper and other things. Although we love copper, I think it's quite interesting what's going on with lithium. I think it could potentially drive interest to other commodities in the metal space. I'm paying very close attention to that, and I'll give you just a small thesis here, short one. But basically, back in the 90s, what really drove the technology space was the venture capital industries that really deploy a lot of capital into that space and allow them to become what they are currently. And so what you need in a really big macro trend is that source of capital needs to be there. And so it is very interesting that you're seeing some energy companies and some auto businesses is starting to invest in mining. And that starts with small things. As they make more money and the underlying price of those commodities go higher, they might get interested in other things. And, I think it's natural to see that. And so those companies have been kind of printing money for a while, particularly oil companies. And it is sort of, to me, it's a much easier transition to go from oil to renewable energy than maybe oil to perhaps metals and mining. I think it's a much easier transition to a lot of those companies. And so not that they have to transition, but they're being forced to do so and by ESG funds and so forth. And so, that could be one answer for most of those businesses. And so, I think that access for capital coming from those different industries can be very, very good for the overall metals and mining industry.
Talking about electrification metals, we can focus on copper, or we can go in general because they're all almost in the same bag or in the same site. Do you think that electrification, how it's organized now, it's even possible? And what will happen if we postpone electrification or there is a recession over there?
Well, I think that the price behavior of those commodities would tend to have a more cyclical way of moving. Perhaps could be less cyclical than prior recessions. I'm not here to say copper wouldn't decline in a severe recession in the US or globally, but I don't think it would decline as much as prior recessions. And so, I think there's real demand in those materials and commodities. And so, again, it's sort of interesting what's happening is lots of skepticism in hard assets, but they all look to me like they have limited downside price. To me, that's kind of the new thing that I've been thinking a lot about is that. And I don't know. I think there's going to be a lot of interesting developments in electrification. Where we don't want to be really stuck into is this idea that, let's say, lithium would be the only winner out of all this, and certainly will not be. And we'll likely see a lot of different technologies in terms of batteries and ways to do things differently. and other minerals are going to play a role into this. I just saw a study on silver demand coming from solar panels, which a lot of people have been saying that, but just to put into perspective, if we start seeing things like the demand could jump to over a billion ounces of silver a year. A billion ounces of silver a year. I mean, that would be at least Cannington deposits in Australia. I mean, that's we can't find those deposits every year. That's insane. I mean, we're going to be in a deficit. So I just don't understand much about how well. I think if you've been in the markets for long enough, you realize that things are a lot of times not very logical and rational. And this is sort of what's happening in some of the metals and mining. I don't think people really understand the supply and demand implications we may have in the future. And a lot of people are doubting that that's the case. And so, likely back to your question, is it possible to see electrification? That's a good question. I don't know, because the way things are set up today, I think the answer is no. Now they're going to force that no matter what, I think. And so that makes me believe that we're going to see some big changes in politics, big changes in the way we treat miners, the way we treat approvals and permits and all sorts of things. And so now I think that's underway.
Even if we take the financial side of that, like that scenario we were talking about, around 7%, it's and potentially a hard landing afterwards. I mean, lots of people said soft, but anyway, it's at that level, it might be hard. Do you still believe that copper, will keep on going up? I mean, of course it's going to be affected, that definitely for sure, but you still see that strong enough because of its scarcity right now for the demand?
Back in the days, we would short copper on a hard landing scenario.
Yeah.
Let me say, I would not do that right now. I think there's other ways to position your portfolio in that scenario that you don't need to be short copper. And you just don't know what the Fed is likely to do here. What if we see the beginning of a downturn and the Fed decides to go full mode QE again? I don't know. I mean, I think that would be crazy, but that's possible. And does that mean copper go lower? Probably not. And maybe my shorts will be wrong. Maybe we have another run in equity markets. I doubt it, but
because
that could be it.
If we put
you can always short take.
This is a hyperinflation kind of scenario. I don't put a lot of weight on that scenario, but boy, it's a probability as well, and you should consider that. So I just don't short copper. How about that?
How will be inflation there?
Yeah, I mean, I think shorting copper is a bad idea, but I can see copper declining in a recession. Of course, I would not bet against that. I mean, I think that sounds logical. It's a cyclical commodity. If there's a cyclical downturn, makes sense. But I don't know. It's not in my first thing when I think about, okay, things are going to go south. It's time to be. We're already short copper anyways in terms of supply of it. So do I also need to short the other side of it? I'm not sure. I'd rather just put a short on mega caps and something along those lines. So
there is any commodity that you consider that is now in a bubble?
That's a good question. Well, I wish the valuation of lithium projects would get, we would get 1/10 of that in the mining, in the gold space. That would be great. I think the cost per mineral essentially is more expensive in some places, but some others are extremely cheap. I don't get it why it's still so cheap to buy a gold discovery, let's just say. It is insanely cheap still compared to, copper requires a much larger investment because you got those you got to do deep drilling and
Yes.
it requires an enormous amount of capital, which is fine. I mean, I think it's justifiable and probably going to do well. Like when we got bullish on commodities, we thought about all sorts of commodities. Well, first thing we thought was, how long can the supply things really be fixed? Agricultural commodities can take 2 to 3 years or so, although they may do very well for a decade or so, but the supply side of it may not be as strong as the story now, 3 years from now. Oil, it can take 5 to 7 years. Metals and mining, as of today, it can take 10 to 15 years to get things resolved. So that was the reason why we thought, all right, metals and mining should be the first focus. Okay. Everything looks depressed, but that was our idea initially. And then you think about, for instance, between oil and metals and mining, how much do you need of capital to create an exploration project? Well, in oil, you're probably going to spend hundreds of millions of dollars to create a doable exploration project for the year. If you do the same in the metals and mining space, let's say gold, with $3 million, you can do some damage. You can find a discovery with $3 million. You can prove a thesis with $3 million. You can't do that with oil. So
it's hard, but doable.
Doable. Oh, by no means I'm saying a discovery is easy. It's extremely difficult. But think about, for a fund that you have, whatever, $200-300 million, and you poking all these ideas, right? I mean, there's all this thesis all over the world, in Peru, Bolivia, Brazil, Canada, in Yukon, and in the Golden Triangle, and you find all this crazy ideas, and you finance all of them, and if one of them hit, that's it. That's your year right there, right? And so, or maybe that's all you need. It's just a huge winner that you bought it for 5 million market cap, 10 million market cap, and it's now worth over $1 billion. And so, that's sort of the thinking. It's that risk reward over time. So I don't see any bubbles in the commodity space that I can think of. But maybe in cattle has been going up a lot. Again, I don't short commodities. Maybe orange juice. I saw orange juice prices going crazy up. I like to look for those things that haven't had a move yet. So in the metals and mining side is interesting because you have the underlying price of gold being so high and staying high and so resilient. And despite that, you can buy a project with very high probability of doing that. And then think about this, right? I mean, you have that mathematical kind of approach towards it, and then on top of it, you say, all right, well, we can do that ourselves and finance all these little deals, and potentially we have one or two that may work very well. And then on top of it, you say, all right, how do I improve my odds from here? What if I bring the best geologists I can find to help those guys to be successful and maybe direct them differently? And to me, that's no brainer. But the problem is there's not a lot of geologists out there that can do that type of job. So and it goes back to the inefficiencies of the industry. So if you're able to find that, then you improve your odds on top of it. So that's now your odds used to be whatever 30%. Now it's maybe it's more like 60% or so. And what if you do that over 100 investments? So that's my thinking about all this.
Yeah, talking about projects with the potential that you mentioned, there are a few of them. It's anyone that are you taking an eye on? I mean, it can be like under the radar or just at the public view. What any tip? Anyone that you would like to highlight? The first one that comes to your mind is that if anyone asks me for a project, I would say bloop, and that comes automatically. Something that you really see that has a clear potential to grow.
Yeah. Well,
I know it's a very bad question,
or,
very tricky question. I know, but just in case.
Are you asking for names or are you asking for the process itself?
Answer as you like. I don't want you also to put
you want
for a name. Okay, Amadeo wants a name. Give me a name.
Oh boy. There's a lot of names. I mean, I don't, a lot of people ask, so we had the success of Snowline recently. A lot of people ask me, what's the next Snowline? But boy, I wish I knew, I've been trying to cut my
Figure it out.
losers and figure out how to find more snow lines, and it's not easy. But I think there's a lot of good names out there. No, there's the interesting part right now is there's this high quality names that are now trading below their discovery hole. So think about this. You went there, you drilled it, you found something, you likely have a major discovery, a world-class thing. The market goes up and up and up and up on that news. And then for macro reasons, the whole thing falls apart back to below those levels.
Yeah.
That's a no-brainer, right? And so you got to add to those things. So that's what we've been doing. So I don't want to call any of these names no-brainer, but I think there's definitely a lot of them out there. I mean, I think Western Alaska is one that is trading below discovery. It has a ton of high quality silver, high grade. Altamira is an interesting one. Kuya just made one of the best drill intercepts of silver in the last 6 months or so, and it's back below the levels that it was before. We love Tectonic. Tectonic been moving higher recently, but we love that name because they've been drilling, and we have a, it's our new snow line kind of target. I think I said Altamira in Brazil, but that's really interesting name. But I think ultimately what you're looking for is, I think there's the more traditional way to answer that question would be yes. You're looking for a jurisdiction that is that you can build a mine. Forget the safe, not that you want unsafe areas, but there are places that are less, safe in terms of the political aspect, that still provide a great value if you invest at the right price, and that you can still develop a mine in many places in the world, and some of the best mines are in the worst jurisdictions, and so things can get developed if they're high quality and there are ways around the political side of it, and it will be very unique to each place. But the way we approach is, has a mine been built here before? If the answer is yes, then more likely we'll be getting more involved. I'll give you an example. Snowline, kind of, you check that box. I mean, it's grade was great. It's recoveries are great. The metallurgy was good. The size of it was scalable, and the big question was, it's a remote area. And everyone used to say, well, it's a remote area. And as we speak with other major companies that were interested in investing in this, in the mine and so forth, you can kind of see that those guys, for them, it's not a huge problem, that side of it. If the capital justifies, again, the investment, they will do it. They will build the infrastructure. So for them, that part of it, while the market was all worried about the remoteness, everyone else was saying, no, that's a no-brainer. We should be an investor in those, in a strategic investor in that name. And so scalability is not everything we invest end up being scalable and large, but the mindset at the very beginning is that there is likely something very large here. We would never invest on something that is small. And there's certainly a market for that too, by the way, where majors are not really, so there's mispricing in that side too. There's some really smart guys that only focus in smaller projects, and they're very profitable. That is not the way we invest, because we are looking for that speculative mode of how much is in there. It's just it's this massive thing, and then it's economical, and it's going to be one of the largest. That's what we're looking for. But there are different ways to invest in the space, and metallurgy and grade and all that is a huge part of it. You can't have a low grade deposit, because if you do have a low grade deposit, it reduces your optionality, because now you're really leveraging on the gold price, meaning if the gold price doesn't move, it doesn't make that whole thing economically viable. And so it could be a great play, but in my opinion, I would much rather, there's so much risk in the space already. Why would I add another one? So, I can cancel that risk by owning a high quality asset, which is today priced at those low quality names as well. So, a company like Western Alaska basically is trading at levels of other companies that have much lower quality of assets, in my opinion. Just giving one example of markets being illogical, and it could be being irrational and illogical by many reasons, because they need capital, they have a fund that is liquidating their asset for other there's so many things that could potentially be the reason for why an asset is not performing well. If the underlying thesis hasn't changed, I don't think you as an investor should be ignoring that, because when things really pop, if silver goes to $50, $100 an ounce, and those guys are able to attract capital to really drill and do their things, it could potentially be massive. And so that's sort of what we're looking for. We're kind of much more longer term oriented in terms of that.
Thank you very much, Tavi, for your time. I think that we are almost at the end. It's been an hour that we take of your precious time. Thanks for being here, for sharing your thoughts. We had a great time, and we hope that we can discuss further in another time.
Sounds great. Thank you very much for having me. Great questions, by the way.
Thank you very much, Tavi.
Yep.
Amazing.
Disclaimer: the content in Charlando de Minas is not an investment advice. Amadeu Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Charlando de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amadeu Bonet. Welcome to Charlando de Minas.